Hi, this is Todd Colvin coming to you from the floor of the CME Group. We are talking energies, and oil prices saw a bit of a bounce today. We had oil prices rallying. Don't forget, last week we made new year-to-date highs just above $66 a barrel. We saw a 6.5% decline since, as tensions between the U.S. and the world about trades and tariffs and maybe slowing global growth or whatever it was, it really, oil took it on the chin and was down, down about 6.5%. We've rallied since then, and we got north of 64 today briefly. So it was about a $2 rally from yesterday's lows to today's highs. And it was really kind of a correctional move, I think, at this point. Right now, the key levels to watch in oil, you get back above 65 again, it probably means we're going to see another big boost higher. Likewise, if we get below 58, that could mean prices are going to creep back down closer to 55 over time. But right now we are still in the meat part of that range, and it doesn't look like we're going to have any sort of big move anytime, at least calculated. Moves in oil come and go very quickly, though, as we know, with all the geopolitical risks that we see around the world. But right now we're in the meat part of that curve. So right now I don't see any fear or concern for a breakout move. And if you look at the supply numbers today, the EIA put out higher declines in stockpiles for the U.S. Obviously, we're seeing more exports. We're seeing more go to refineries. That's good. That's going to continue to push oil prices higher. That's something that needs to continue to happen. Obviously, supply has been the one targeted area of the oil market. Started with OPEC and their production cuts marrying into non-OPEC countries. And it really is the U.S. versus everybody in this one. And as the U.S. continues to ramp up shale production, yes, those production numbers out of the Middle East will not be quite as hard as they wanted. However, they've been doing the job, and oil prices have been creepingly going up. As long as OPEC continues to maintain those production cuts, oil prices will remain elevated. And lastly, what's going to be the big cause here for any substantial decline in oil? Yeah, the production that we just talked about, if that starts ramping up out of the Middle East or out of Russia, out of some of the non-OPEC members, that would be one thing. The other is going to be global growth. Global growth is expectations are very high, or at least lofty. And I think that right now with the U.S., we're seeing first quarter GDP numbers, which were about 1.8 last week, have trickled up now closer to 2.5%. That's good. We need 2.5 to 3% GDP globally in order to see these oil numbers make sense. Obviously, the more the world is churning and burning, that will continue to see oil prices elevate. So right now, in trade issues could put a stop to that. So right now, it's got to be global growth. It's going to be the one catalyst that could see oil prices decline if it isn't there. Right now, markets are pricing that it is, and oil prices are high. This is Todd Colvin coming to you from the floor of the CME Group.